Hello.
Okay, yeah.
Yeah. Okay. So we have the three different time frames: daily, weekly, and monthly, right? And we are not going to draw any kind of structure on the daily, weekly, and monthly time frame. Why? Even if you are right on the weekly time frame, but like I said, that for example the market is going up whole week, and then suddenly on Friday maybe NFP news or some any other kind of news, the market just drops and you think, oh, I was right, directionally the market came down, but actually you never ever get involved in this market. And even you are right directionally or with bias on weekly time frame, but you never yield profit from this one, so it's not going to help. Okay, so ultimately your whole focus, we will use the daily and weekly time frame. I tell you we how we will use it, but it's not for the buyers. You have to understand one thing, it's not for the buyers. A lot of people, they on the YouTube, they are showing that on the weekly, on the monthly, or even 3 month time frame to show the bias. Just imagine if this is a 3 month time frame and you are coming from here to here, this will take maybe 3 years, something like this. So how you can wait 3 years to come from this point to this point? And
Yeah.
even with this 3 months, one candle, for example, if this is the 3 months, so in the 3 months, how many things happen inside? I know that the price is fractal, but you have to understand that you don't need to spend too much time on the monthly, weekly, or even daily time frame. You are 99% of the focus. 99% of the focus will be on what? On H1, M15, and M3 time frame. If you have M3, is okay. If you don't have, you can use M1. Okay.
Okay.
Yeah. So your 99% of the focus should be on these three time frames, and you will draw the structure only on these three time frames. Okay.
Okay.
And then, okay, now we check that how we can use this information on the daily or on the weekly time frame. So for example, look here. If this is the candle, right? And the market close somewhere here inside the body of this candle, we are expecting the next month, I mean the week, the next week, the draw on liquidity will be the high of the previous week if the market closes inside the body of this. Why? Because the came down market came down, and then it got rejected, and now it is inside the body of the previous candle. So if it comes back, at least we are expecting that the price, if the next week opens here, and we will wait a little bit manipulation like this, and then maybe we get involved, and this will be our draw on liquidity. And the market will not go in just one go. At the draw on liquidity, we will have a lot of ranges on the 15-minute time frame, and we will follow those ranges, and we go over there in a while. And one thing you will check this thing. The second thing, what you will check, the second thing you will check, for example, this one, this week. If you have this week bullish candle and you don't have the next week yet, this is the bullish candle. This is what I call ICPA. ICPA means imbalance close price action. So imbalance close price action means, usually what is the fair value gap? Usually the fair value gap is something like this: the market just crosses and something like this, and we say, okay, this is the fair value gap, the three candle formation, right? But for the imbalance, we don't need to wait for the third candle to form. If it does make the fair value gap, is okay. But even before the third candle, just the second candle already created the imbalance. Why? Because the market, this was the high, and the market just crossed above this and never looked back. So it means that this week from here, this is the closing price here. This is the closing price. From here to this week, if you see that there is a gap. Why? This, like I said, fair value gap. Can you see here? Third candle, you don't need to wait. If it does, it will turn into the fair value gap. But I use not the word fair value gap. I am using the word imbalance close price action. Imbalance close price action is the pattern for just two candles, something like this. And now we are expecting that the price next week will come to test this one. If not next week, then maybe the next to next week, something like this. So in this case, when we open here, this one, this is the open price, weekly open, and we got a little bit manipulation, but we are expecting that maybe we are going to take, or we are going to close or fill the imbalance, and this was the imbalance. You understand? So this is the second thing we will see. The third thing we will see on the weekly time frame, and this is not only on the weekly, but the same concept is on the daily time frame as well. So I'm just talking on the weekly, but you will apply the same things on the daily time frame as well. If the price comes back into the range, then the high you will target, and opposite it is true on the sell side. And second, you will now you will check that imbalance close price action even on the daily time frame. And third thing, you will check, let's say the price has closed here, and today is Friday, let's say, and the price just closed here, then this is the week. This is the week. So this is what we call key level. You can say, if this is a weekly time frame, you can say weekly key level. If this is the daily time frame, you can say daily key level. And now we are expecting that the market will open here, and this was our draw on liquidity. And if the market open here, maybe wick here, and then it can go to test our draw on liquidity, and then we will be looking for the bullish ranges on the 15-minute or even on the 3-minute time frame. Okay,
Okay.
so these are the three things I told you. The fourth thing is itself is the fair value gap. It's not the imbalance close price action. Fair value gap. If we have the fair value gap, and I think you know this concept very well because this is very hot topic everywhere. So this is the fair value gap when these three candles created one, two, and three candles. So this area is the fair value gap. And now we are expecting that, look here, if this is the week, what we are expecting, look here, this is the key level, right? So the market
Yeah.
opened here, just tested the weekly key level, and then headed higher to close what? The fair value gap. Okay, and that's why we were bullish off of weekly key level. You understand?
Yeah.
Right? And similarly, if the next week started, this will be our key level. Can you see that the price exactly came came to the weekly key level and then headed higher? And what was the target? Let's, if this is the weekly, this is the weekly time frame. If this is the daily, you will have the target or draw on liquidity. You will buy somewhere from here, and you will go here, but on the 15-minute you will find the bullish ranges, and we will go over there in a while, okay, to find the ranges.
Yeah.
So you get the point that these are the only three or four things what I told you to do on the weekly or on the daily time frame. You don't need to do more things on these time frames. Okay,
okay,
and then you go on the uh, H1 time frame. Okay, this this is the H1 time frame, and on the H1 time frame, what usually you need to find? You need to find the structure, and the structure you will always start to mark from the top of the range or from the bottom of the range. Let's say if the market is going up, you will start to mark from the bottom of the range, and if the market is going down, you will start to mark from the top of the range. Why? Because you want to find something like this. If the market is something like this, you don't know the what is the structure, right? Something like this. But we want to find the change of character. We want to draw our structure from the change of character so that we can be on the right side of the market. If the
Ivan, are you drawing something?
yeah, I'm drawing. Can you see?
Because I cannot see the thing you draw. I can only see the
Oh,
trading view
okay.
screen. But
Oh, I understand. Okay, I draw with this one. Um, okay, okay. Now you can see the drawings, right?
yeah.
Okay, I draw here. Okay, so
Yeah.
if you have the structure something like this and structure is going up, you will always start to mark the structure from the bottom of the range. Why? Because we need to find the change of character. Let's say
Yeah.
the market is going up something like this, or market is doing something like this. What is your structure? You don't know, right? You don't know. But think about it. If you start, check the latest leg is going up. If the latest leg is going up, so better you start to mark the structure from the bottom of the range. Why? Because you need to find the change of character. And if you will find the change of character, if you will find the change of character, you will be on the right side of the market. Okay, and we check this
Yeah.
example as well. So if this is the H1 time frame, by the way, I always have the structure. I always draw the structure here. Have you ever seen on in the live charts?
Yeah.
Have you ever seen this?
Yes.
Yeah, I always draw the structure on the live charts. If you get lost somewhere, you can check on the live charts that where we are in the market. Okay.
Yeah.
So let's say this is the H1 time frame. On the H1 time frame, the first thing what you need to find, because we are going up. So if we are going up, we need to find the structure from the bottom, and we need to find the change of character so that we can be on the right side of the market. So if this is the low, if if this is the low, where is the QM? And you know the QM, right?
Yes.
It will be something like this. The liquidity is taken out and the breakup structure. Okay, so look here, the price is coming down, and then the price took the previous candle's high. So like this, so this is a valid pullback. So the QM consists of three things. Number one, a valid pullback. Number second, liquidity grab, and number third, break of structure. So look
yes,
here, this is the valid pullback, and this one is what? Point number two, the liquidity grab,
yeah,
and this one is what? The break of structure. So this consists 1 QM. So in this case, look here, the price is coming down and we got the previous candle high. So we got a valid pullback. And the previous candle should not be the inside candle, because inside candle we don't count it as a valid candle. So if this is the inside candle, then we need to check this high needs to be taken out for a valid pullback. So in this case, this is a valid candle. So when you see the valid pullback will always come from the valid candle. And the valid candle is what? It is not the inside candle. Okay, you know the inside bar, right? The bar inside the previous candle. Okay,
okay,
yeah. So the price took the high. So this is the valid pullback. So we got the valid pullback, and then this was the valid pullback, and the price took the low of this candle, this white candle. So this was the liquidity grab, and then we got what? We got the QM. We can say the break of structure. So this confirms the QM. So if this is the QM, it means we can say that the high is confirmed. I mean the low. The low is confirmed, right?
yes,
And similarly, now we need to see another one. Look here. If we are coming something like this, and this is the valid pullback, right? This is a
yes,
valid pullback, and then we have the liquidity grab, and then we got what? We got a break of structure. And if we got the break of structure, we have the QM. So it means we have the range from here to here. And now we are looking for what? Like I said, whenever you need to draw the structure, you need to start from the bottom of the range or from the top of the range, and you need to find the two latest QMs so that you can draw the change of character. Okay, you need some practice. It's not a very difficult thing, but uh, in case you have any problem, you can send me the message. I can help you. Okay, so
okay, okay,
this is the change of character. Now you understand that we got a bullish change of character. So if we have the bullish change of character, it means we are bullish. Directionally, we are bullish. And once we have one QM, what to do next? You have to find the next QM, the opposite QM, to confirm the range. And if
yeah,
this is your QM, right? This is your QM. Why? The price is going up and takes the previous candle low, and the previous candle is not the inside bar. That's why this is a valid candle. So when the valid candle low is taken out, this is a valid pullback, and then we got the break of structure, right?
yes,
So it is
yeah,
something like this, the same thing, right? Just on the opposite side, right? It is something like this. This is the liquidity grab, and this one is the breakup structure. So the breakup
yes,
structure is basically what? the QM. So now you can say that our range has confirmed from here to here. And once our range is confirmed, you are on the 1 hour time frame, on the 15-minute, or even on the 3-minute time frame, or even the 30-second time frame. The logic is same. What? When your range is confirmed, the very first thing what you need to mark is your decisional order block.
Yes.
Okay, the decisional order block just for example, if you are bullish, just lie below the week high, and if you are bearish, it will be just above the week low. So in this case, we don't have any decisional order block. Why? Because we have this big candle because of the news, fat news yesterday. So we don't have the decisional order block. In this case, we can just mark the extreme order block. We have three types of order blocks. Number one, we have the decisional order block. Number second, we have the number second we have the extreme order block,
Yeah.
and number third we have the external order block. And external order block also used as an inducement in few cases, and we will discuss this thing also. External order block also used as an inducement in few cases. So in this case, we are looking for the decisional order block. If we don't have the decisional order block, we can mark the extreme order block, and we have the extreme order block here. So this is our extreme order block, and from the below the extreme order block we will find what? The external order block. Even if the price comes down and takes your extreme order block and goes down
Yeah.
and breaks this one, it doesn't mean that you will immediately turn bearish. Even this will be the change of character. Let's say even this will be the change of character, but it doesn't mean that you will turn bearish. Why? This is the third concept. External order block also used as an inducement in few cases. So if this is the inducement, then we are bullish from here again, and we are targeting what? We are targeting this high, and we will be bullish. And anybody, for someone, if this is the change of character, they are selling here, they are selling here, or maybe at the extreme. These are all SMT. SMT what? Smart money trap. And later I explain that how you know the inducement, it is inducement or it is the real change of character. Not every change of character is real change of character, and not every change of character is an inducement. You have to understand the concept that which one is the inducement and which one is the change of character. If this is the change of character, then after the QM, let's say if this is the QM, then we are looking for sell from here, and we are looking for another break of structure, something like this, if this is the real change of character. And we talk about in a while what is the real one and what is not. Okay.
Okay.
Okay, so this is on the hourly time frame. We draw the structure, and we now we are clear that okay, on the hourly time frame, this is our structure, and this is the high is confirmed. From here to here, the high is confirmed. Okay, but we don't have the decisional order block to buy anything. That's why we go on the lower time frames and also draw the structure there. In this case, we go on the 15-minute time frame. I'm going to delete everything. Okay, if we are on the 15-minute time frame, on the 15-minute time frame, what we have, this is the clean slate, right? And if we are going up, we can say that this is the low on the 15-minute time frame. If this is the low on the 15-minute time frame, where is the QM, right? The QM is here. Why? Because the market is coming down, the first pullback, and the market has taken that pullback. So that's
Yes.
why this is the QM. Okay, if this is the QM, then we have the change of character here. Okay, we have the change of character here. Why? The market, if you see that the market is going up, already has taken any kind of QM. If this was the QM, it's not the QM. Why? Because the market didn't come down. Look here,
Yeah.
if the market needs to take the liquidity and then need to grab the and then need to break the structure, so this is not the QM. uh, okay, this you got the breakup structure, but question is, where is the liquidity? You didn't grab the liquidity, so this is not the QM. Okay,
Yeah.
but
Okay.
if you see here, if you see here, market is coming down, and this is a valid pullback,
Yeah.
and then the market broke the this one just a little, maybe just one pip or something, broke the low. When the
Mm.
market broke the low, now you can say that okay, we have the QM. If this was the QM, then the market came down, and then this was the high, and we got what? We got another break of structure. So this was a valid high. That's why I told you that we need to find the low and the high to find the change of character. If we can find the change of character, then it's very easy that we are on the right side of the market. And even if you are a little bit confused in the start, you can simply do just mark the structure like this. You can simply just put the dot here on the low and find the QM, and then the most recent swing, just use it as a change of character, because ultimately you have to do everything in this area. Now you don't need to do anything here, so you don't worry even if you do something wrong in this area. You understand? But of
Yes.
course, I'm not saying you should do wrong. I mean, maybe in the start, if you get confused in some point and you think you are doing something wrong, don't worry when you mark the structure, because actually you need to do everything in this area, not this area. But slowly when you get used to with this system, then you will understand that you are correct, marking everything 100% correct. Okay,
Okay.
so in this case, if this is your change of character, what you are looking for? You are looking for, this is the low, where is the high? And you need to find the high when we got the change of character. So where is a valid pullback? This one. And the market is going up, and the market has taken this one. Can you see this one?
Yes. Yeah.
So if this is your QM, in this case, you can say that the high is confirmed. Now you have the range from here to here. Okay, now you have the current range from here to here. And once you got the QM, the very first thing what you are looking for, the decisional order block. We don't have the decisional order block because of this news, but of course it will not happen always, because news are not always in the market. You will find the decisional order block even on the 3-minute time frames. We will go over there also, and things will start to make sense to you. And then we have the decisional order block. If the decisional order block, let's say if this is the decisional order block, it is not, but I'm just giving you an example. For example, if this is the decisional order block, what we are looking for? We are looking for the price to come at the decisional order block and make another breakup structure. But in other case, if the market comes here and fails the decisional order block, then we are looking for the price to visit the extreme order block, something like this. In this case, we will never ever be on the buy side, maybe here, or anywhere. These are all SMT, smart money trap, if we
Okay.
disrespect the decisional order block. So if we disrespect the decisional order block, our next target is the extreme order block. We will keep selling, keep selling, keep selling until we reach at the extreme order block. But keep selling how? We will go on the 3 minute time frame to find the bearish ranges, and from the bearish ranges we will sell, we will sell until we go at the extreme order block, or maybe even at the external order block. And then if this is not the inducement, and then we are looking for another breakup structure, something like this. So decisional order block, when you mark the decisional order block, you have only two things to check. Number one, is it holding? If yes, look for another breakup structure. It's here.
Yes.
Number second, if it disrespects, we are going to visit extreme order block. Any other bullish order block in the middle of DOB and EOB or SMT, we will never buy it. Okay, we will
Okay.
never buy it. Why? Because if disrespect, we are already looking for the extreme order block here. So any order block in the middle, we will not try to buy this one or this one or this one. In fact, the market, what the market will do, the market will do something like this. The market is coming like this, maybe get some reaction to induce the buyers. But this reaction for us is actually the sell. So the market will come down and maybe from this order block get some reaction and then do something like this. So these reactions are basically for us the ranges from here to here. This will be the range. From here to here, this will be the range, and we will be selling it. We will be selling it until where? Until here. You understand?
Yeah. Yes.
Okay. So this is the 15-minute time frame. What you need to check, how to draw the structure correctly, and then the next thing what you need to do is whenever you open the new day, the very first thing what you need to do is you go on the weekly and daily time frame, mark your key levels, which I told you before, and then you need to do here, it's daily open. If you see that, this is always on my charts. So this is the daily open.
Yeah.
Okay. So the
Okay.
daily open price work as a support or resistance, or also not only work as the support and resistance, but also to take the best price in the market. For example, if you are bullish, if you are bullish and you are looking for, this is your draw on liquidity, and this one is your monthly, I mean the daily open. And if we see the price at or below this one, we, and if we are bullish, and I tell you why we are bullish and when we are bullish later, I tell you. If we are bullish, we are looking for to buy at or below the daily open, and we will buy until our draw on liquidity. So this will be the best price for us, something like this. This will be the best price for us. We will find the ranges, something like this, maybe from here to here, if this is the range, and this is all the internal range liquidity. So below the internal range liquidity, maybe we are buying from the extreme order block, something like this, and we are looking for the external extreme order, I mean we are looking for the draw on liquidity or another breakup structure, something like this. And that's why you have to use this daily open line every day. Okay. And similarly, the next thing which we will do, and I do every day, if you notice on my chart, that you need to find the H4 candle as well. So if you notice that I have these small boxes, this is a 4 hour price action. This is also a 4 hour price action. And then 1 o'clock this opened, and 5 o'clock China time, 5 o'clock this 4 hour will also finish. So every 4 hour I have a box, something like this. 4 hour, another 4 hour, another 4 hour. Then I didn't put any box here, but because I don't want to clutter too much. But this white section is also 4 hour. Then this is also 4 hours. So these are 20 hours. Last 4 hours we don't trade, because this is midnight 1 o'clock in China. Uh, because you are trading the euro US dollar, if you, maybe you will be not trading this time, but I use the, I'm trading the Nasdaq futures, so I trade until 5 o'clock, 4 o'clock. So I use everything. But for you, you don't need to use this area. Why? Because this is in the midnight 11 o'clock. Oh, sorry, 1 o'clock to 4 o'clock. This action, and you are already sleeping, I think.
Yeah.
Oh, yeah. So the 4 hour price action, and later I show you the settings of this one. In the recording, you will have, this is the Asian session. We have this settings. This is the as per China. Then we have
Yeah.
the Frankfurt settings, and then we have the New York setting. And I kept this one like this, just opened like this. And this is also the 4 hour. And this is the opening candle of the 4 hour. And this is next 4 hour. Then this is the opening candle, open price of the 4 hour. So now we have what? We have the 4 hour, and I explained you how to use this one. 1 second. Okay, so we have the H4 open. We have the H4 open. If we have the H4 open, and if we are looking for the price to take this high, I didn't check on the daily time frame what we are looking for, but I'm just giving you the example. If we are looking for the price to go on this, then this was the range from here to here, and this was the beautiful buy just below the H4. For example, if we go on the 3 minute time frame, look here, look here,
Yeah.
what we have. We have the QM, right?
Yes.
And then what we have? We have the QM, right? And then What is this? This is the extreme order block. So actually you are buying here, stop loss just below this one, and you are targeting what? At least this one. This is your 4.5 R. And in my system, I use anywhere between 4 to 7 R in my day trading. So if you get your 4 to 7 R, at least you close your position like 70-80% of your position. If you want to close all, it's okay. I close all between 4 to 7, and 4 to 7 is already a big number. Like you see, if this is the 4, why you will not target that one? Because this is the order block. Maybe the price can reject from the order block. So in this case, you just go to the 4 and you get it. You understand? and
Yes.
and you got what? You got the best price. And what is the best price? The best price was below the H4 candle. If you are bullish, you understand what I mean?
Yes.
Okay, so this will be your setup. And even now the market if comes down something like this, who care? You got your 4R from this setup. You understand?
Yes.
In this, and now we go on the 15-minute time frame again. Okay, so H4 time frame, you what you will do, you will always mark the H4 time frame. Once you mark the H4 time frame, then you will understand that which side you are looking for. For example, look here. Now I'm going to give the answer to your question that how to switch from the 15-minute to 3-minute time frame, which you asked me earlier, right?
Yes.
Look here, I show you. If this is your range on the 15-minute time frame, right? This is the QM, here was the QM, this was your range, and you are here in the middle of nowhere. Then how to do? Of course, you will not wait for the price to come all the way here and then you start to think about it to buying. Of course, you will not wait like this. You're a day trader. The price can take several days to come here, maybe 2 days, maybe 3 days, sometime even 7 days. I'm not saying in this case, but there are the cases. Sometimes the market is just doing maybe 1 week like this. And in this case, what you will do during this whole time period? And I explain you what to do. You will go, if you have the range from A to B like this, and you got the QM. Now you go on the 3-minute time frame. From the 3-minute time frame, first you need to check the step by step. Listen carefully, step by step. This
Okay.
was the low, this was the change of character, this was the QM from here to here. Once you got the QM, now you are in this. So actually you are coming from which side? You are coming from this side, right? Because you got the
Yes.
QM. You are not coming from the this side. When if you are here, then you are coming from this side. But when you got the opposite QM from here to here, the opposite QM, now you are coming from this side. So if you are coming from this side, during Asia session, you can go on the 3-minute time frame. And on the 3-minute time frame, this is the first 4 hour and this is the next 4 hour. And in China, 1 o'clock, the next 4 hour candle starts. 1 o'clock. So
Yeah.
you find the highest point of this Asian session. What is the highest point? What is the highest point? This one,
Yes.
right? So if this is
Yeah.
the highest point, what we have? from the highest point. This is the QM, right?
yes,
Okay, and on the other side, this is a valid pullback. Can you see this
um,
this one?
oh, yeah, 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 yes,
Can you
yes,
see this is a valid pullback? So this is
yes,
your range, right?
yes,
So if this is your range, from the above, from the QM, you wanna sell. And can you see that you are exactly at the daily price? And also, like I said, this is your best place to sell. Why? Because if you are a seller in this range, you are a seller according to
yes,
this range. And you have the best price at the daily open or above the daily open. So if so in this case you don't have anything, but you have only the fair value gap. So if from the opening price you sell and you stop loss is maybe above not only this one, even this candle is still 1.5 pips, something like this, and you target at least 4 hour or 5 hour, something like this. You understand?
yes,
So on the 3 minute time frame, what is the step? The step is on the 15-minute time frame, you need to check which side you are coming. If you are coming like the opposite QM, it means the bearish one. You are coming on that side. Then you need to find the Asian session high. The Asian session high to confirm your to start to mark your range. So your range starts from there. This is the QM. You need to find the opposite QM. Your range is confirmed. Once your range is confirmed, what you are looking for? You are looking for the decisional order block. If you don't have the decisional order block, maybe the fair value gap or something like this. So from the decisional order block, what we are looking for? We are looking for sell. And in this case, our sell is exactly at the or above the daily open. So we got the very good price. It doesn't mean that you will get every time the good price, but whenever you get it, you can be more confident that you got the very good price. Okay, and then you are
yes,
looking for what? You are looking for another break of structure. Okay, you are looking for
yeah,
what? You are looking for another break of structure, and this break of structure is not exactly here, but actually here. Why? Let me remove this one. Why? Because look here,
this is
the
the week,
the price it has just the week. Okay,
yeah,
and then now you need to use not this candle, now you have to use this candle to close below this one, and then what you have? Another week.
yeah,
Now you don't need to use this candle, but this candle, the wicked candle, and finally you got close below this one. Can you see?
yes,
From the wick candle you closed below this one. So that's why now you can say safely that you got a break of structure, but break of structure is from here to here rather than this one. You got the break of structure here. You got it?
yeah,
Okay, good. So if you have the break of structure, what you are looking for? You are looking for
yes,
first your high is confirmed, right? Because
yeah,
high,
yeah,
low, this is the lower high, right?
yeah,
When the lower high will confirm, when you get another break of structure. Once you got
yes,
the break of structure, what you are looking for? You are looking for the opposite QM. The opposite
yes,
QM, if you see here, these seems the inside candles. these are all inside, so we will not use them, this one, as a QM. We will go further up, and this is also the inside. And actually, what we have, these are the insides, and this is all coming down. Okay, we have only this valid, this one, as a QM. But I think on I was looking at the price on the Oanda broker. I remember there was the QM, this price, because I was looking at this price. I remember. Let's check on Oanda.
Yeah.
Uh, what broker this is? FXCM. Okay, we check on Oanda. Can you see that?
Yes. Oh, yeah.
Yeah, it has taken already on Oanda. Okay,
Yeah.
but I'm not using Oanda this time because I have the markups here, all everything. So I just don't want to mess up with these markups.
Okay.
Okay, we go back to FXCM. So actually, on the, let's say this is taken out on the Oanda, and we are using Oanda. Okay,
Yeah.
okay. So if this one is taken out, then our low is confirmed, right? So now we have the high, we have the low, lower high, and lower low. And lower low is confirmed when we got a QM. Okay, we got the QM, and from above the QM we have the decisional order block. From the decisional order block, actually we are looking for sell. And the target is what? At least not always you target the lowest point, the weak, but the rejection block, because there is a lot of time the market will not exactly come to this point, but actually just this is the rejection block. You know the rejection block on the line chart, can you see that? This one, you see, this is the last price here, this one.
Yes.
So this is the rejection block, you see. Like I said, a lot of time the market maybe not take the weak low, but just from the rejection block it can reverse. So better you keep your target at the rejection blocks, not exactly at the weak. Okay,
Okay.
in this case you are up, you are again 4R from this position. So you got one 4R here, and you got one 4R here. You are 8R. 8R means what? 8% in just two trades. And these trades didn't take very long time. It's just from here to here. This is just 36-minute trade. And then
Yeah.
from there to here, it's 1.5 hour. Why? Because this was during the Asia session. But of course, this is during the London session, took just 30 minutes, 35, 36 minutes, whatever. And you are done for the day. And this all bias came from where? Came from the, you start to mark the structure from the Asian range high or Asian range low. In this case, we are marking from the Asian range high. Why? Because where we are coming from on the 15-minute time frame, we are coming from the bearish side. You understand?
Yes.
Okay. So now you understand how we will use the 3-minute time frame. And the next thing is what? The inducement. How do you know you have a valid change of character or you have the inducement? For example, if this is the 3-minute time frame and this is the QM and price takes this high as a change of character, so this is the M3 time frame. So if you have the range on the 3-minute time frame from here to here, and then the market gets the change of character like this, how do you know that this is a valid change of character? If this is a valid change of character, you are looking for a QM, and you are looking for a QM, and below the QM you are looking for a buy, something like this, right? But if this is not a valid chalk, then it may be the inducement. And when this is the inducement is M3. First you have to understand the time frame like this: M3 lower time frame to higher time frame, M3 to M15. So M3, the higher time frame is what? M15.
Yeah.
N15 to H1. The higher time frame is H1. H1 to H4. This is the higher time frame H4. H4 to daily. And the last one is M1 to M5 if you are using M1. So in this case, if this is the M3, you need to check on the M15. If the M15 is the QM, you understand? If M15 is the QM, for example, listen carefully, this is a very important point. You need to focus on this one. If M3 change of character on the M15 is a QM, then most likely this is the inducement. Why? When you get the QM, what you are looking for? You are looking for the decisional order block.
Yeah.
From the decisional order block to sell, and that
Okay.
cell will be this one. Does it make sense?
Yeah. Makes sense. Very makes sense.
Yeah. So this is how you will understand if this is the real change of character or this is the inducement. If this is not the QM on M15 time frame, it is just somewhere in the middle of nowhere, then this is the real change of character. And if this is the real change of character, we have the range from here and then the opposite QM, and then from the decisional order block we are looking for pi. If the decisional order block disrespect, we are going to sell until the extreme order block, and from the extreme or external order block we are looking for buy again. You understand?
Yeah.
Okay, so if this is the true change of character, but if it is not, then it is the decisional order block on the M15 time frame. And of course, from the decisional order block on M15 time frame, you are 100% looking for sell, not the buy. Okay.
Okay.
How can look here? If this is on the 15-minute decisional order block and in fact you should be buying here. Just think about it, people who are you need to sell here from this, but just think about who are buying here, maybe here or maybe here. Why? Because we are bearish, but they are trying to sell. They are trying to buy because of this change of character. But this change of character was the inducement.
Yeah.
You get the point?
Yes.
Okay, good. So this is the inducement. And similarly, the same concept is on the, if this is the M15, then you need to check what? H1 time frame.
Yeah.
Okay. If on the H1 time frame, this is the, what is this? If this is the decisional order block you are selling, then this will be the SMT on the, for the buyers. SMT means smart money trap. They are buying because of 15-minute change of character, but actually this was on the H1 time frame sell. Okay, so in this case, let's say, let me remove some drawings. In, okay, let's go on the 1 hour time frame. We go back, we have a gap here, we go to check the ONDA. This is the H1 time frame. Look here, look, can you see that this was the QM,
Yes.
right? So if this was the QM, and from that QM we are looking for sell, right?
Yeah.
We are looking for sell. So, but on the lower time frame, what is the lower time frame? 15-minute. If 15-minute, this is the change of character, then this will be, the people will turn bullish and they will be buying here, maybe they will be buying here, and actually this is for them is SMT, and actually we are bearish but they are bullish because of the inducement. Why the inducement? The lower time frame change of character can be the inducement on the higher time frame if that is the QM on the higher time frame.
Yes.
You get the point?
Yeah.
Okay, we go back to FXCM. Okay, so okay, so now you understand that how you will draw the structure on the H1 time frame, M15 time frame, and how you will use the daily open and H4 open. Every H4 open you will open. And then the next thing is what? For example, look, the price has taken the low of this Asian range low. Okay, it doesn't mean that we will immediately start to look for buy here. Now if we want to buy, we will start to look for the bullish ranges on the lower time frame, maybe on the 3-minute time frame. If on the 3-minute time frame we find the bullish ranges, then maybe we can target this one, and otherwise we are just bearish if we never get the bullish range. Okay, So
Okay.
let's go on the 3 minute time frame again. And what was our structure before? Our structure was, this was the high, this was the low, then we got this high, and then we got this low, right? You remember?
Yeah.
And then this was the sell and this was the sell. And then from the rejection block, the market is going up and going where? Going where? A change of character,
Yeah.
right? Okay, if this is the change of character on the 3 minute time frame, okay, on the 3 minute time frame, what you need to go? You need to check on the 15 minute time frame if this is the QM or not. You understand?
Yes.
If this is the QM, then we are not going to be bullish. In fact, we will look for the bearish ranges. So in this case, this one, this is the high. Actually, the market, the high was here. This one. Can you see this one? A little bit smaller, I think. This is a valid pullback. Can you see this? This candle high took the previous candle high. Can you see
Oh, yes. Yeah. Yeah.
this? So this was actually the QM. So this change of character actually is not the QM. So that's why we are not looking for sell here.
Okay.
Do you understand? But if
Yeah.
this one, if that 3 minute change of character is here somewhere, then maybe we are looking for sell. You understand what I mean?
Yes.
Okay, so this is the QM is here, not this is the 3 minute change of character is there. If 3 minute change of character is here, then maybe we will try to sell something like this. Okay,
Yes.
so in this case, what we got? We got the change of character, and what we have?
Yes.
This is the QM, right? So our low is already confirmed, and we got the change of character. Now what we are looking for? We are looking for something like this, and then we can say, okay, this high is confirmed. And if the market is continuously going up, maybe we need to move our QM to the most recent swing low or most recent pullback, valid pullback. Okay,
Okay. Yeah.
so this is how you will go on the H1 time frame, M15 or M3 time frame. And M3 time frame, you need to understand one more thing. You will, if you have the bullish range, if you have the bullish range, you will not turn bearish just because here have a POI, or maybe here have a POI. I'm just giving you the example. I'm not saying these are the POIs. I'm just giving you the example. If the market comes here and on the 3 minute time frame you are going something like this, you will not sell like this directly from there or from here. You will wait for the strong low to be taken out. on the 3 minute or even at least on the 1 minute time frame. So what is the strong low? Strong low is not the shift of market structure shift. For example, look here, look here.
Okay.
If you reached here, let's say this was your POI. I'm just giving you the example. If this was your POI and you say, okay, my market has taken the QM, just for example. Of course, this is not the QM, I'm just giving the example. Let's say if you say market has taken the QM and now I'm looking for buy from here, from this range to this range. Actually, this is not the buy. You are still in the bearish range. Where is your bearish range? Your bearish range is A to B. So after the QM, your range just confirmed. Even you reached at the POI, it doesn't mean that now you are looking for buy. Actually, you are still in the bearish range. Who knows, the market continue go down. You will turn bullish only when this strong high is to be taken out and you get the change of character. Now you will have the range something like this A and maybe at some point B if it takes this one. And then maybe you will be looking for buy something like this. You understand what I mean?
Yeah.
You will always wait for the change of character on the lower time frame to change your direction, not just because the market has reached to your POI and you see, okay, I got the market structure shift or I got the QM, let's buy here. You are not going to do this. Market can continuously go down. Why? Because you are still in the bearish range.
Yeah.
Understand?
Yes.
So that's why you will wait for the change of character.
Yes.
And then once you got the change of character, then you will have a range from A to B after the QM. Then from the decisional order block or from the extreme order block, whatever the order block you will have available, you can buy from there.
Okay.
Okay.
Yeah. Yeah.
So do you have any other question?
Oh, I think yes, my question is clear and yes, your explanation is very clear.
Mhm. Where are you feeling the problems in trading actually?
Sorry.
Where are you having the problems in trading?
Sometimes maybe I cannot find the correct correct range.
Correct range. Okay.
Yeah.
Mhm. Okay, good. Look, for you, you can just go here and find the latest range. Just I'm telling you the starting point. Let's say you go on the M15 time frame. Okay.
Okay.
When you will open this one, what you are looking at? You are looking the range from here to here, right?
Yeah.
You are looking at the range from here to here. So you should not be worried about that you are on the wrong side of the range. Like maybe you drew the wrong range or something. Why? Because this is a guideline for you, that you can say, okay, Imran have this range from here to here, and this is the QM. This is not the IQM, by the way. This is the real QM. Okay, so you have the QM. Once you have the QM, then you should know that the range has confirmed. When the range is confirmed, then I always most likely will have the DOB or EOB, these kind of markings as well. So from those areas you need to start to think about to buy or sell. And if in this case don't have, it means we, because of the news, we don't have the DOB, then what you do? Then
Oh,
you,
even are you change the screen because I'm still at the 3 minutes time frame, the FXCM.
okay, okay, because I shared the screen, that one. It's okay. I have to switch the screen, so I don't switch. Okay, so on my Discord channel, if you see that we have the live charts,
Yeah.
right? So whenever you are feeling lost, or you feel that your range is correct or not correct, you go to the live chart to check what is the current range on my chart.
Okay. Okay.
Okay, in this case, you will get an idea that which is the correct range and what to do. For example, currently we have the 15-minute range. We have the 15-minute range, right? So if we have the 15-minute range and we don't have the decisional order block on 15-minute range, if you see, let me open. Look here. Now you can see, right? Currently we have what? We have the range from here to here, and we don't have the decisional order block. So when you see this on my Discord channel, then you will simply go on the 3-minute time frame, and on the 3-minute time frame you will start to mark the structure. Understand?
Yes.
You will start to mark the structure on the 3-minute time frame, and on the 3-minute time frame, the you will follow that structure
Okay.
until where? Until your order block. For example, look here. What we have? We have the high, this one. We have, we want to check the internal range, right? This is the high, and where is the QM? We Our QM is here, and the market never took the QM and then broke another structure. So actually the QM is here. Where? Here. So this QM, we have the QM here. Now what we have? We have started the internal range from here to here. Now we have what? The internal range. So from the internal range above the QM, what we are looking for? We are looking for the decisional order block. This is the order block which is already mitigated, but this is the unmitigated wick. So this unmitigated wick actually is our decisional order block. So from the decisional order block, we are looking for what? We are looking for another breakup structure. But this breakup structure is what? The internal breakup structure, because this is the internal QM, and our internal range have started from there A to B, and from there now we are looking for this thing to price to come down to take this low. You understand?
Yeah. Yes.
and and we want to keep selling until our strong high is to be taken out. In this range our strong high is this one. But let's say this is the internal range, something like this, from there to here, and let's say internal range comes something like this. If we get the QM here
Yeah.
and the range is from there to here, it doesn't mean we are looking for buy. No, actually we are looking for sell. We will be buyer only when the internal strong high got the internal change of character. You understand?
Yes.
Okay, and now we are looking for buy until where? Until here. Why? Because we are looking for another breakout structure on the higher time frame. Okay,
Yes.
higher time frame means on the major range. On the higher time frame, not on the higher time frame. Time frame is same, the 15-minute, but the major structure. The major structure high is this blue big dot, and the small blue dot is the internal structure. You understand what I mean?
Yes.
Okay,
Okay.
so we already got the internal structure, and now we are looking for sell here on the 3-minute time frame until here. Until here, and then maybe on the 3-minute time frame just continue. You understand?
Yes.
This is how you will find your structure or your bias like this. You will be not like this, that you just come in the morning and see, okay, this is the QM and this is the QM and I'm going to sell. No, you need to find the overall context, that on the 15-minute on the H1 time frame what you have, and then you need to check on the 3-minute time frame and start to mark the ranges from the maybe the structural high, or at least from the Asian range high or Asian range low.
Okay. Yeah.
You understand? And once you get
Yes.
this one, then you will start to play them. Okay,
Okay. Much
and
more clear now.
I'm sorry.
Yeah. 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 I'm much more clear.
Okay, good. Okay, so I don't know why it is taking long time to load today.
Oh. Yeah. I think.
Let it load a little bit.
Okay.
Okay, so let's say this is the highest point. Okay,
Okay. Yeah.
and this is the highest point and the market wants to come down, and we need to mark the structure. Okay,
Okay.
so what is the where is the high? This one is the high, right?
Yes.
Hmm? So if this is the high, then this is the valid pullback. Can you see?
Yes.
Can you see this is the valid pullback,
Yes.
right? If this is a
Yes.
valid pullback and you see this was the QM. Can you see this one,
This one. But yes. Yes. Yes.
right?
Yes.
So if this was
Yes.
the QM, then this was the breakup structure, right?
Yes.
So if this was the breakup structure, before you have the range from here to here, right?
Yes.
If you have the range from here to here, what you are looking for? You are looking for buy from the decisional order block. In this case, your decisional order block and your extreme order block is at the same time. I mean, at the same place. Can you see?
Yeah.
Because this is your range. If your decisional order block is somewhere here, then we can say this is a decisional order block, this is the extreme order block, if we have the bigger ranges. But this is a small range. So the price got reaction from this one and failed. When it failed, we already looking for what? We are looking for the change of character to mark the structure. Like I told you that when we mark the structure, we always mark from the top of the range or maybe from the bottom of the range. Okay?
Okay.
In this
Okay.
case, in this case, where is the QM? This is a not QM. First, we need to check the valid pullback. This is a valid pullback which is never taken out. Then this is the valid pullback, never taken out.
Yes.
Then this was the valid pullback, also never taken out. And then we have this one is the valid pullback which finally taken out. Can you see this one?
Yes. Yes.
So if the valid pullback is taken out, your low has been confirmed, right?
Yes.
So if your low has been confirmed, now you have the range from here to here, and now you are looking for sell. You go on, if everything is mitigated here, you check on the different time frames to find the closest POI here, because market never care what is the order block is. We use the order block just to control our risk. Why? Because for example, if this is our order block and we are looking for buy here, so we think okay, we can buy something like this. But if the liquidity is here, maybe the market just come take the liquidity and then go higher, maybe never take your order block. Market doesn't know the order blocks or anything. Actually market only knows the liquidities. You
Yes.
understand the point?
Yes.
So that's why not always you focus on the order blocks, but they are very important. Why? Because they help you to control the risk, where you need to put your entry, where you need to put your stop, or these kind of things, just helping you out. But when the market has taken out the liquidity, you always keep in mind that the market can be ready to reverse. Understand? So in this
Yes.
case, let's say Okay, let's say we are here. Okay, we are here,
Okay.
and we go on the 30-minute time frame, go on the 1 hour time frame, 5 minute, 3 minute. Only this one seems. Can you see this one? The
Yes.
unmitigated one. Only seems this one, but of course in the real market you will never know that order block is going to work or not. That is true, but you can simply do like this from the QM. If you don't have the decisional order block or something like this, just to check a standard, maybe 3 pips or something like this, and what, then you can target the another breakup structure, something like this, and it is yielding you 6.5 R or something like this. And because now you know, if you want 6.7 or if you want to a little bit more safer, I'm just telling you my thought process, how I adjust the risk management. For example, if it is the 6.7 R, and I am afraid that the market, because I don't see any kind of POI here, so actually the real POI may be somewhere here, maybe, but it is not giving me the good risk to reward. And because we don't have any other POI, but we have the QM, and we are looking for sell, so maybe I want 4R or maybe 5R, and then I will adjust my stop loss according to 4R or maybe 5R, something like this. I say, okay, if this is my stop loss, or maybe this is my stop loss, and now it seems a little bit better for me, that okay, I have the room. The market maybe will not go all the way here. Why? Because we don't have the q we don't have the order block. It's okay, but market has already taken the liquidity. We have the range from A to B, and the momentum is to the downside, so we are expecting what? We are expecting another break of structure. You understand what I mean?
Yes.
So something like this. So if we are here and we have already entered in this trade, I don't know, we can go on the 3 minute time frame or not. Okay, we can go on the 3 minute time frame as well. Okay, so what we have, we are already in the trade. Okay, we are already
Yes.
in the trade, but we start to mark the 3 minute structure as well. Let's say if this is the high, where is the valid pullback?
Mhm.
I think this one is the valid pullback, right? This one, these are the inside bars. This one took but the inside bars low is taken out. So this is not the valid pullback. So we use this one as a valid pullback. Let's say this one. So our high already have, and we are looking for to mark the structure. If if this is the QM.
Yeah.
Okay, so we can say that our high is confirmed, right?
Yes.
Now this is a valid pullback, this one, and the market needs to take this pullback. Okay, Oh, the market didn't take this one. It's okay. And now what we have? We have another one. This one is a valid pullback, right? We are already in the trade, if you know.
Yes.
Oh, okay. We go on the 15-minute time frame. Looks like we didn't find the second entry yet. We didn't find the second entry yet, but first entry we are already inside and we are looking for this one. Then we see maybe we can find another one. Let's see. Okay, this is just the liquidity grab. Can you see we reached to the target? Okay,
Yes. Yeah.
now where is the QM? This is a valid pullback. Can you see this one?
Yes.
This is a valid QM, right?
And
And
yes.
from that valid QM, what is this? Decisional order block, right?
Yes.
2.8 something pips. And again, minimum this target 4 hour. Okay, or since we are coming from there, we can target something maybe this order block or something like this or here, whatever. Okay,
Okay.
to this order block we can target this one, and this will be actually 8 hour is too big. 7 hour it's something like this. Okay, and now this is the low, this is the high, this is the high, and we are looking for another sell. Okay,
Oh yeah.
yeah, you see, so what we got, we have the high and we are looking for another QM now to confirm the range, right?
Yes.
So this is the valid pullback. Can you see that? This is a valid pullback, right?
Yeah. Yeah. Yeah.
If the market takes, okay, the market has taken already the valid pullback. Okay, so from the valid pullback, our range has confirmed from here to here. Can you see?
Yes.
So if our range has confirmed, we go on the H1 time frame. And from the H1 time frame, we are we can bounce from here. Okay, so
Yes.
that's why we will avoid to sell from the decisional order block, because one time frame higher we need to check that where we are. Okay,
Yeah.
in this case, if our low has confirmed, now we go on the 3 minute time frame to check if we can target this whole liquidity. But of course, we are not expecting, we are not anticipating that this will must happen. If it happens, it happens. If it doesn't happen, it doesn't happen. We actually want to find the range on the 3 minute time frame. If we can find, if not find it, not find, it's okay. You understand?
Yes.
So what we have, this one is what, the QM on the 3 minute time frame. From here to here we have the range. Can you see?
Yes. Yeah.
Actually we have the range, not from there to there. We have the range like this, from there to here. But of course we will not take this entry because market just took the QM. We are looking for the second one. Okay,
Yes.
so what we have, we are, you know what is this? The breaker block. Do you know the breaker block? Do you know the breaker
No.
block?
I forgot.
Okay, no problem. The breaker block is the failure of the order block. Let's say,
Oh.
let's say this was your order block and you were expecting the price to come here and bounce, but rather it failed. So if it failed, then this order block turned into as a breaker block.
Okay.
Okay, so in easy term, failure of an order block is a breaker block. Okay,
Okay.
so think about it. This was the order block, right? Can you see the
Yeah.
up candle came down and the price rejected, 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 and finally what I did? Finally failure, right? So the failure of the order block turned into what? As a rejection block. Okay. So from the rejection block, if we enter and let's say the stop loss is a little bit lower like this, and we target this liquidity, and then we go on the 15-minute time frame to check how's the things. Oh, okay. So we have what? We have the QM, we have the range, we have the 3 minute bullish range, and we have the 3 minute breaker block, right?
Yeah.
Okay. In this case, we get like this way.
Yeah.
Okay. We,
Yes.
we get like this. So what's happened? So we got here, right? And then
Yeah.
what we have? This is our range high. Can you see that? So if we are looking for sell here, we will wait for the confirmation entry on the lower time frame. Understand?
Yes.
We will not enter directly. we will wait for the confirmation entry on the lower time frame. And let's go on the lower time frame to see the confirmation entry, because otherwise this is our change of character, right?
Yeah.
So if this is the change of character and we are looking for to sell from here, from this order block here, the extreme order block, but we are looking for the confirmation entry. So let's find the confirmation entry. And the market just broke the change of character and we don't have the confirmation entry. So that's why it saved our loss, that we are not entering directly but from the higher time frame POIs, but we want a confirmation entry model. And confirmation entry model will be like this: 3-minute time frame, and from the 3-minute time frame the QM from the decisional order block or the extreme order block we buy, and then we get another range from the decisional or extreme, or maybe from the breaker block we buy, something like this. But this is the higher time frame extreme, we are not going to sell directly like this.
Mm,
Okay,
okay.
remember this point, this is very important point. People they think like this way: oh, price is going up, the higher time frame, let's do, oh, it's just 4 pips, and what is the reward? The reward is, wow, it's 8 hour, let's do it. I'm going to risk just let's say $40 to make I don't know how much, $800 or something like this. If they are thinking like this way, it's wrong. Why? Because you need to go to the lower time frame to check the confirmation entry model. Understand?
Yes.
And without the confirmation entry model, you will not enter. You will never ever enter. Okay?
Okay. Okay.
Okay. And then we go on the 15-minute time frame. What we got? We got the change of character, right? We got the
Yes.
change of character. From the change of character, what we are looking for? We are looking for the opposite QM, right? Because we have
Yes.
the low, we want a high. So if we are looking for the opposite QM, then we wait for a valid pullback to be taken out. Actually, from there, the valid pullback is here, and the market is never coming here until now. Okay, this is the next day has started. Okay, the next day has started. If we are in no man's land like this, we are in no man's land, then you remember that what I told you, if we are something like this, what we do, we go on the 3-minute time frame. Do you remember I told you to start to mark the structure from the lowest point, because the first 4 hour is done. Can you see? This is
Yes.
the second
Yeah.
4 hour have started.
Yes.
Hmm? So if this is the low and this one is the QM, where is the opposite QM? It's here. Can you see?
Yes.
You see, this is the opposite QM. Huh? So from the
Yes.
opposite QM, what we have? We have the order block here, but we know that we have the imbalance below also. So of course we are not going to risk only like 1 pip, we are going to cover the imbalance as well. Can you see the imbalance?
Yes.
So if we
Mm.
enter at the, if we enter here at the decisional order block, and our stop loss is maybe below this one, or at least a little bit, maybe here 3 pips, we have covered up our imbalance. Can you see that imbalance?
Yes. Yeah.
uh, Look here, from here to here, this is the imbalance.
Yes.
Can you see this candle?
Yeah. 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 I
Right,
see.
this is the
Yes.
unfilled area. From here,
Yes.
actually the imbalance was here, here to here, but it filled up halfway. So now halfway to here, this area left.
Yes.
Okay, so not only we are going to take the decisional order block from there, but also we cover up the remaining portion, if it makes sense.
Yes.
Okay, and then what we are looking for, at least we are looking for 4 hour. Okay, at least we are looking for 4 hour, something like this. And now you understand, on the 15-minute time frame, our range was not confirmed, but we got the change of character, and we are looking for another QM. But if we are in this situation, then we go on the 3-minute time frame and start to mark the structure from the lowest point. Okay,
Yeah.
this thing we already have talked about. And then, because this is the Asia session, of course we will not take the entry during Asia session, but you are in China, so you can even work in the Asian session. It's not the big deal. But
Yes.
I usually don't, because I wake up even 1 o'clock, and then I get ready for 2 o'clock for trading. And I usually don't trade too much during London session. My real session is the New York session from 9:30 to 4 o'clock in the morning.
Yeah.
But anyways, it works everywhere, in every time frame like this. You understand? You got your 4 hour,
Yes.
and this was your range, right? So if this was your range, look here, this was your range, right? And then
Yes.
from there, you don't have a valid pullback until here. But actually we should not stay on the 3-minute time frame too much. Why? Because actually what we are looking for, we are looking for the 15-minute QM. Yes or no?
Yes.
So the market, this was the first valid pullback. Market never came here, rather market broke the structure, and now where is a valid pullback? Maybe here, this one, right?
Yes.
We are going something like this, and we got it. Okay, and now what we
Yeah.
have, we have the 15-minute range. Can you see? From here
Yes.
to here, we got the 15-minute range. So from the 15-minute range, what you are looking for, the very next point, what you are looking for, you are looking for a decisional
Decision.
order block, right?
Yes.
And then you have what? This one is mitigated, so we take this whole portion, something like this. This one is what? Extreme order block, right?
Yeah.
Okay, so if this one is the extreme order block, and now what we are looking for, we have the range from A to B, and we have the bullish change of character. So from this area on the 3 minute time frame, we are looking for buy. But if this disrespects, then we are looking for extreme order block. Okay,
Okay.
so in this case, we go on the 3 minute time frame to check the price can give us a bullish range from here. Okay,
Yeah.
oh, rather than market give us the bullish range, it directly disrespected, right?
Yes.
So if it has disrespected, then what we have, we check the 15-minute time frame, how it looks like there. It is getting disrespect. So if it get disrespect, then this dob before working as a support and now turned into what? As a resistance. If the price comes like this, you understand?
Yes.
Okay, so in this case, we go back to the 3 minute time frame to find the bearish range. Why? Because we are losing the decisional order block, and now this is our target. So you can write here, draw on liquidity. Now whatever the range we will find, we will only find the bearish range. Okay, and
Yes.
in order to find the bearish range, can you give me 1 second please? I take a quick water. Hello.
Yes.
Yeah, I take the water quickly, huh?
Okay.
Yeah. Hello.
Yes.
Yeah, yeah, yeah. Okay, so where we are?
Break the decision order block. This is bad.
Decisional order block, right? In this case, we are looking for what? We are looking for the bearish range. Until where? Until our draw on liquidity. So let's wait. This is the valid pullback. Can you see this one?
Yes.
This is a valid pullback. So our internal range has confirmed. So from the internal range, what is this? What is this one?
Internal decision order block.
It's the decisional order block, right?
Yeah.
Hmm?
Yes.
So if this is the decisional order block and we want to sell something like this, a minimum 4R, something like this, right? Hmm?
Yes.
Okay. I don't know, the price maybe a little bit, maybe 1 pip or less than 1 pip, or maybe with the spread the market will take the order. But anyways, this is where we enter. You understand,
Yeah. Yes.
right? And now if this is another breakup structure, of course the breakup structure confirmed to this candle because closed below this one,
Okay.
right? So
Okay.
so
Yeah.
in this case, low, and this is our high,
Yes.
right? And this is the QM. Can you see?
Yes.
In this case, we take this one as an order block and another 4R, but this time looks like a 5R something.
Yeah.
Okay,
Oh.
so this seems also maybe point one point a little bit miss. You can, it depends on you. You put the limit order here, or even if you see that this was the fair value gap, so you put a little bit at the fair value gap. It all depends on you how you enter into the trade, but I'm just telling you the how to trade. You understand?
Yes.
So what you got? You got another breakup structure, right? You
Yes.
got another breakup structure. So if you got another breakup structure and this was the range, it means your high is confirmed, right?
Yeah. Yes.
Okay, if your high is confirmed, now what you are looking for? You are looking for an opposite QM. So this is a valid pullback, not taken out, not taken out, not taken out, and now this is a valid pullback, and we need to see if it is taken out or not. It is taken out. Okay,
Yeah. Yeah.
so if the valid pullback is taken out, you can say that our range is confirmed from A to B,
Yes.
right? So if our range is confirmed, then what we are looking for? We are looking for sell, right?
Yes.
This order block is mitigated. This order block is mitigated. Can you see? This order block is already mitigated.
Yeah.
This order block is also mitigated, right? And then we have this order block which is unmitigated, something like this, including this one. Can you see this one?
Yes.
This is unmitigated, right? So if we don't have anything here but except here, okay?
Yes.
And what we are looking for? We are looking for another breakup structure, but this is the 6 point something R, okay? And if we go to the 5R, maybe 4.8 or something from here, maybe if it goes there, it goes there. If it doesn't, it doesn't. But at least we are getting 4.5 R, okay?
Okay.
You can put one here, but close your 50% of the or 80% of the position maybe here, okay?
Okay.
Okay, so we are here, we are back, and we are still in the range. Can you see this one? We are still in the range, but this swing failed to take the low. So this turned into what? T2. You know the T2? Type 2
T2.
is
Yeah.
the failure swing that is unable to take the major swing high or low, becomes liquidity. T2, this is the T2. T2 is the failure swing. This is the failure swing, this one. This one. This is the failure swing that is unable to take the swing high or low. So you see, it is unable to take. Then
Yes.
this one becomes what? The liquidity. You understand? If this becomes
Yeah.
the liquidity, then we are looking for sell above this liquidity from there. And now we can target at least this one, or at least this one. At why this one also? First we will target this one, and then we can target this one also. Why? Because now this failure swing becomes the liquidity also being taken out. So that's why now we are expecting not only to take this low but also this low. Understand?
Yes.
You understand the T2? The T2 is if a swing fails to take the major swing low or major swing high, that becomes the liquidity. And if the market
Okay.
is going up, it will become the liquidity. And above the liquidity, what we want? Always we want to find an order block to enter. Okay?
Okay.
Oh, wait. Okay.
Yeah.
Oh, stop. I have stopped, but it is still moving. What's happened?
Right.
Okay. Uh, what is it doing? Okay, we are here, right? And the market has taken what? This one. This is what? The breakup structure. You understand?
Yes. Yes.
Okay. And actually, we are heading to where? Don't forget it. Actually, we are heading where? Do you remember?
Yeah. EOB.
EOB. Why? Because the decisional order block was what? Disrespected.
It's effect. Yeah.
Okay. And I
Yeah.
told you that the decisional order block, if it disrespects, this one can turn into the resistance. Understand?
Yes. Yes.
So this one can turn into the resistance. So we are here, and what we are looking for now? What we are looking for?
Breakout structure.
We are looking for another breakup. We are looking for another QM.
Yes.
So what we have? This is a QM. Not this is a QM. These are the inside bars. This is a QM. Can you see?
Yes.
Yeah.
Yes.
But this is a Asian session. We will not. We will avoid this one. But of course, now our range is from there to here, right?
Yes.
So if our range is from there to here, and let the Asian session start. Okay, if this is the QM, and then above the QM, where is the unmitigated order block? Do you think this area,
Yes.
right?
Yes. Yeah. Even can you explain a little bit about how to accurately find it is mitigator or unmitigated?
Unmitigated or mitigated? Well, look, if you just check this candle, see, I explain here.
Okay. Okay.
Let's say this is the candle, okay,
Okay.
and the next candle is maybe like this.
Okay.
If the market comes down either body or the wick, test this candle's high or any part of this body, it means this is already mitigated. You understand? If test this one like this, or maybe like here, or maybe like here, or even test a little bit like this, so this is the mitigated. But
Okay. Okay.
if the high is here and the next candle is like this, next candle is like this, and the next candle comes like this, something like this, now we are looking for buy, something like this from here. Okay, so this
Okay.
is the unmitigated one, and then this candle came to mitigate this one, and we can enter from here. You understand?
Okay. Okay. Yes.
But look here, look here,
Okay.
look carefully, look here. These are the up close three candles, right, in a series. You can say in a series going up. Why?
Yes.
Because every candle have a higher high. Can you see?
Yes.
One high, then another high, then another high, right?
Okay.
So every candle is going up, so it means this is a series of three candles. So these are series of three candles. If we just take all, it looks like this candle mitigated. Can you see this candle?
Yes.
This candle, right, tested this one, but this candle came down and the next candle mitigated. But if we take this candle as well, now we have this whole zone which is never mitigated. Since this is the zone, but I take this high as well to be a little bit as a swing high, to be a little bit on the safer side, that if the market wants to come up, don't break my high. You understand? So if you
Yes.
notice that these are all different candles, but this is all, look here, unmitigated. This is never tested yet, this area. Can you see?
Yes.
Right? Candle just came down but never returned.
Yeah.
Okay,
Yes.
so that's why I'm taking from there to high, and this candle never mitigated this one. Can you see this one? From the body to wick,
Yes.
never mitigated. Can you see?
Yes.
And that's why I want to enter here and stop loss maybe here, and target where? Maybe here. You understand?
Yes.
And this is the only unmitigated area we have. Otherwise, everything is mitigated below.
Okay.
There we go.
Yeah.
Okay? And we
Okay.
got this
Yes.
one. You understand? And when we got another breakup structure, then our high is confirmed, right?
Yes. Yeah.
So if our high is confirmed, what we are looking for? The opposite QM. So this is the low, and this is the market has taken the high of this one and then came down and then break up structure. So this is a valid QM, right?
Yes. Yeah.
So if this is a valid QM, what we have? We have only this area unmitigated, right?
Yeah.
And this is the range. So if we enter here and stop loss is there and we come here, it's 3.6 risk to reward. I want a minimum 4R. You remember? I
Yes.
told you a minimum
Yeah.
4 to maximum 7R. So actually, even I'm not expecting here. If it comes here, it's only 3R. I will avoid this one to see maybe a little bit further price action. Okay, maybe we can get a little bit better price. Maybe here. If we get some better price, then we can get easily 5R. Okay, so that's why
Okay.
we are going to avoid this one because it is not up to our risk to reward. And in order to go there, we got another QM because we are looking for the market to come here, right?
Yeah.
So where is the QM? These are all inside bars, and this bar has taken the liquidity. And we can say that the range from here to here, we have the range to reach to here. Okay,
Yes. Yeah.
and we have this order block, right? we
Yes.
have we have this order block, and let's see if we can get 4R, 5R, something like this or not.
Oh, yes.
You understand why I'm widening my a little bit stop loss, just to be a little bit on the safer side and still get the 4R.
Okay.
Okay,
Yes.
it all depends. You want to do like this or like this, it will be very big, but I don't like too much a narrow stop loss. If it can reach to my target with my 4 to 7R, I'm okay. You understand?
Yes.
Huh?
Yes.
Market without us. This was the nice order block, but I think what instead market did, market moved from this breaker block. But of course we are not in this trade, so we don't need to regret. But you see that order block, can you see this? And that order block failed convert into the breaker block. Can you see?
Yes.
You see that order block
Yes.
and then failed. and turned into
Yeah.
the breaker block. But of course, we can't regret. But if we enter here, of course, this is not the entry, but just for the example purpose. Yeah, this entry can yield us, but it will be risky. Why? Because the stop loss is even inside the order block. Can you see? Breaker block and order block are almost at the same place. So if you enter at the breaker block and your stop loss is within the order block, it's risky.
Yes.
You understand? You see, this is the order block. You never know that the market will go up from the breaker block or from the order block. So if you cover up this one also, then we are not interested.
Okay. Yeah.
Okay?
Okay.
So I think it's very long now, and you will continue be on the sell side until here.
Yes.
Okay? So do you have any question?
No. No. No.
So I will be available if you have any question after this session. You can just send me message on Discord, and as and when I will be available, I will answer you. If you have any doubt on the ranges,
Okay. Okay. Thank you.
you understand. Let's see the current market. If you remember that we draw the 15-minute uh, that one. If you remember the structure, and the market was at the decisional order block. You remember or not?
Yes. Yes, remember.
So this was the decisional order block, and from the decisional order block, I told you that we are looking for this one, right?
Yes.
So this was the current market, and of course, when you draw this one like this, you try to cover up the swing also. Okay,
Okay.
yeah. And now from there it is rejecting. So on the 3 minute or on the 1 minute or even on the 30 second, if you have, is okay. If you don't have, it's also okay. On the 1 minute time frame, you can find the bearish ranges. For example, here this was the high,
Yes.
and this is the QM, and then what we have, if this is also the QM, then you can enter from there until your 4 hour or something, 5 hour, something like this. You understand?
Yes. Okay.
So this is the current market. How on the 15-minute time frame we saw everything. If you remember the 15-minute time frame, we drew the structure. You remember?
Yes.
And the structure was what? If I remember, the structure was the internal structure. I'm going to delete everything quickly. And then the final words. This was the internal structure, if you remember. And we said, okay, this is the internal QM, and this was the QM, and we have the bigger range from there to here, and the internal structure from there to here, and the QM, and above the QM, the decisional order block, but internal decisional order block, And from the internal decisional order block, what you are looking for on the 1 minute time frame or on the 3 minute time frame, you are looking for sell. And on the 1 minute time frame, you have the range. Something like this. You understand?
Yes.
So this is how you can do the things. Okay.
Okay. Yeah.
And if you have any question, is okay. Then we finish it, right?
Okay. Yeah.
So do you have any question?
No, so far. I will rewatch the session again and again. If I have any other question, I DM you on Discord and ask you.
Okay. Okay. So we finish it, and later I upload the recording, and I give it to you. Okay.
Okay. Thank you. Thank you. Thank you very much, you. Thank you.
No problem, Alex. No, no problem. Have a good one. Thank you.
Okay.
Bye
Okay. Bye
bye.
bye.
Bye
Thank you.
bye.
Thank you.